This is the Southside School of Financial Freedom Watch List and Market Report for the week ending May 6, 2023. Our question this week is, what is the FDIC? The answer will be provided later in the video. This week, the market ended mixed. The Dow Jones Industrial Average increased 1.65% on Friday, but was down minus 1.24% for the week. The S&P 500 increased 1.85% on Friday, but was down minus 0.8% for the week. The Nasdaq increased 2.25% on Friday and was up 0.07% for the week. Looking at the week, we can see that there were 3 up finishes versus 12 down finishes for the major indexes. On Monday, Tuesday, Wednesday, and Thursday, all the major indexes finished down. But on Friday, they all finished up. New unemployment claims were 242,000. Job openings fell to 9.5 million in March, which was more than expected. Private payrolls surged by 296,000 in April. Home prices rose for the 3rd month in a row, but mortgage demand dropped in April, and the Fed increased interest rates a quarter point. New unemployment claims, job openings falling more than expected, private payrolls surging, home prices rising for the 3rd month in a row, mortgage demand dropping, and the Fed increasing interest rates a quarter of a point are all news. And news drives the market, good and bad. Day-to-day predictions on whether the market is going to go up or down are virtually impossible because predicting the news is impossible. However, the market is rigged to go up. It does not go up every day or even every week, but the market will generally go up over time. Stock prices move in a random fashion. They go up and down with an upward drift. The market will go up when the powers that be want the market to go up. While there are many powers out there, the top 5 powers that be are the Federal Reserve, big financial institutions, big corporations, the President, and Congress. These 5 entities will do what they must to drive the market higher. Now we are at our question of the week. What is the FDIC? The Federal Deposit Insurance Corporation, or FDIC, is an independent government agency created by Congress in 1933 to maintain stability and public confidence in the nation's financial system. The FDIC insures deposits, examines and supervises financial institutions for safety, soundness, and consumer protection. It makes large and complex financial institutions resolvable and manages receiverships, that is, have one bank purchase another bank. The FDIC insures deposits up to $250,000 per depositor as long as the institution is a member bank. However, today, many analysts believe that the FDIC and the U.S. government, including the Federal Reserve, is effectively insuring all deposit amounts by having larger banks like J.P. Morgan absorb smaller regional banks like First Republic Bank, as well as the Fed providing billions of dollars to regional banks. Is your bank FDIC insured? Do you invest in FDIC member banks? Or do you own any stocks at all? If not, why not? Is it because you do not understand anything about the stock market? Well, it was not taught to you in school. If you ever want to learn how to get wealth and income through the stock market, you are going to have to teach yourself. You must RSI, that is, read, save, and invest. Formal school taught you how to read, but society and the powers that be discourages you from reading, especially books. School taught you to be a worker. They did not teach you how to be an investor. And they taught you absolutely nothing about the U.S. financial system. You can learn how to be an investor if you simply start reading books about investing, books that you can borrow from the library for free or buy cheaply online. It is not difficult to learn how to be a passive investor which is what most people should do. Check out this list of recommended books on the books page of the Southside website. These books and others like them will not tell you which direction the market is going to go, but you can learn how to make money in the market no matter what the market does. I don't know which way the market is going to go on a daily basis, and I don't care. I trade the market as it is, not as it should be. I take what the market gives me, whether it's going up, down, or sideways. How do I do that? I apply the Southside Strategy. You can learn more about the Southside Trading Strategy at southsideschoolofinancialfreedom.com. Here is the Southside Trading Watch List from the week ending May 6, 2023. The strongest performer on the list this week was Editas Medicine Incorporated, ticker symbol EDIT. It's in the third column. It was up 12.04% on Friday and increased 19.73% for the week. Editas is a clinical stage genome editing company that focuses on developing transformative genomic medicines to treat a range of serious diseases at the genetic level. Looking at a summary of results, you can see that Editas has increased just over 10% year to date. I did not trade or generate cash flow from Editas this week. Whether a stock goes up or down, you can generate cash flow from it. Whether you own a stock or not, you can still generate cash flow from it using the Southside Strategy. The Southside Trading Strategy involves trading for weekly cash flow. That is, trading for income. SPY is shown at the bottom of the third column. SPY is the S&P 500 ETF. This is the benchmark I compare my trading performance to. My objective is to beat the S&P 500 index while at the same time generating cash flow. Most professional money managers do not consistently outperform the S&P 500 index. They usually lose and lose badly to the index. Thus, most investors and traders should just invest in or trade a market index fund or ETF like SPY. What do you do? Do you beat the S&P 500 index? Do you have a watch list? What is your investing and or trading strategy? How well do you do against the S&P 500 index ETF SPY? Let me know in the comments section. Are you willing to share your strategy? The Southside Portfolio Cash Flow System is outperforming the S&P 500 ETF SPY. The Southside Portfolio is up 26.96% versus 7.9% up for SPY, a difference of 19.06%. The Southside is beating SPY by just over 19%. The cash flow generated by the Southside Cash Flow System for this week was 2.59% of the portfolio account value. The account value changed by minus 0.63%. Meanwhile, the S&P 500 ETF SPY changed by minus 0.79%. Bitcoin watch. Bitcoin lost 0.14% this past week and still appears to be on the verge of a bull market. Though it is down more than 57% from its all-time high, which was achieved in November 2021, it is up more than 77% year to date. I sold option contracts on one position this week. It was a call that ranged from $0.00 to $66.34. You can get more details, including the total dollar amount of cash flow for the week, on the website southsideschoolofinancialfreedom.com. To increase your financial IQ and understanding of the stock market, please check out past videos for other questions of the week. The videos are organized in playlists levels 1, 2, and 3. They are also arranged in playlists by subject matter. In the meanwhile, please like, share, and subscribe.